Boom, we are alive, ladies and gentlemen. We're going to be taking a look at Bitcoin's price. We're going to dip really quickly into the S&P 500 at the end of this video and take a look at gold too. Here for TO Tuesday talks. That's right, consistency is the key here for pretty much anything we do. And as I promised for the birthday of Arcane Bear, we're going to do this every Tuesday and Thursday. I managed to get everything set up kind of last minute, but let's dive in and take a look. So here we see the previous Bitcoin bull market cycles overlapped one another. What we're looking at down here is Bitcoin. The purple movement itself is the current Bitcoin bull market. As you can see, comparative to the last Bitcoin bull markets, there is significantly less volatility to the upside. In red, we have the very first Bitcoin bull market of 2013, blue 2017, orange in 2021. And around this time, post-halving, we have seen most of the momentum normally near another about 150 to 250 days outwards from the cycle. So as I was sitting down, I was trying to make a little bit of sense of what was going on. I wanted to take a look at something that you will probably all remember, which is our Wyckoff schematic for reaccumulation after decline. Now, this is the weakest of the bull market reaccumulation patterns, and it usually means that the bull market is near its finality, which would make sense. There's probably maybe 200 to 300 days here left. We looked at this prior. We talked about how somewhere to near the mid of end of 2025, just due to timing and cycles, there's a likelihood that we would find a kind of finality of the bull market. Now, I still have targets upwards of $150,000 to $250,000 for Bitcoin for this particular market cycle, barring any type of unknown occurrence, which could send Bitcoin rushing even higher. As my very first videos talked about Bitcoin going to $6 million. When was that, about 200? We're a long ways away from that, but it still could happen. We just have to be patient. But in this particular market cycle, this seems like it would actually make the most sense, a Bitcoin reaccumulation after decline. Now, one of the things we can take a look at here as well, on the left-hand side, you can see the first reaccumulation pattern, which we will go over a little bit more in depth and detail here. But for now, what I wanted to point out is this particular momentum here from the primary support, the buying climax, to shake out the secondary, and a break right below. Now, in the run up to this, I'd been quite busy. I had taken out a few shorts with a few things because the market just didn't look great in some of the digital alternative assets. But I had a point here that said, is this a sign of weakness or a spring? And I actually don't think it was a sign of weakness. I think it's a movement into a reaccumulation after decline. On the right-hand side here too, you can see the VPVR support, the majority of which is lying between 63,000 to 69,000. So what I'm starting to suspect, and what looks the most likely, is that we get shoved all the way down to the $71,000 area, retesting the previous reaccumulation box. We build up around here for the next 150 to 250 days, which fits our timing cycle for this pattern, giving us another 235 days of reaccumulation. Now, obviously, the general market sentiment in mind too, although I was kind of busy falling in love, not paying too much attention to the market, or rising in love, we'll say, to quote some of our favorite friends. We suspected that there would be something like this, a bounce around 95, a dip into 87,000, and then a break up and above back into the new all-time highs. If we put the bear claw on here, though, which is our stacked exponential moving averages and the slow moving averages, we can see that the 314-day support band is running right around this $72,000 to $69,000 area too. So there's a bit of confluence. The fact that we could not get back above the 200-day simple moving average and are now pointing down doesn't look super great. And the stochastic RSI itself is now also pointing down on the daily here too. So I suspect that this is probably going to try to fully reset now that it's pointing down. So this is my thesis, probably for the next 200 to 300 days. I don't think we'll invalidate this. I don't think the bull market is over. Again, just through kind of rough time on deck comparison here, when we go back, as you can see, the purple bull market cycle, the one that we're currently in on the far left hand side, Normally, we kind of entered the first peak of the previous Bitcoin bull market right around this time, but again, significantly lower in price per Bitcoin over time here, relative to percentage growth. Again, I don't know why it says $1 million up here. Clearly, Bitcoin didn't go to $1 million in the previous Bitcoin bull market cycles. Otherwise, we would have been having a much different story that we have to be back at 90 grand from $1 million. So I'm not sure why they don't do Bitcoin price to percentage growth here, which is, I think, a much better metric. But nonetheless, the fact that we're still have a significant amount of time left until where we would normally peak out, which is somewhere around 200 to 300 days from where we are now, I think that this kind of makes the most sense. That we drop into a reaccumulation after decline here, following again our Wyckoff schematics that we had posted in our private group. This looks the most likely now, again, especially considering the upthrust, as looks like it's pushing us right down to the bottom of the box. I think that that's what's going to happen. We're going to push it right down to the bottom of the box for around 72,000 for Bitcoin price here. So this is the new chart, reaccumulation after decline, and we've fallen into that space now. There are some other reasons I want to go into now very quickly. Number one, I want to take a look at the S&P 500, but we're not going to do it on our charts today. We're going to do it on Mr. Buffett's terms. You know, Mr. Buffett's not a big fan of Bitcoin, but he's had some great ideas in the past following stability and market trends. He's been sitting mostly in cash for quite some time. And what we're looking at here is the Buffett indicator via our friends here at Current Market Valuation. As you can see, the stock market's value to GDP relationship as of December 31st, 2024 was 200% above that. So that's 2 standard deviations away from the historical trend line or the historical average. This is just to state that the market is overvalued. I have long tried to ignore things like this, mostly because if they print money, this doesn't matter. If they print and increase the M2, the inflationary pressure is going to push all asset prices up. I suspect that will continue. There's not a whole lot that could stop that. We are, I think, on Poly Market at the moment looking at the high percentage of 4 rate decreases over the next 12 months. So they're going to keep easing. Quantitative tightening is over for now. The CPI, general indexes have all fallen flat. There's a bunch of deflationary pressures in the market that we've talked about in the past. Everything from excess deaths, increases in disability, and technology just being hyper deflationary. AI as well has made things hyper deflationary. There are many well-paying jobs that are easily replaced by something that can just write and produce decent ideas for you. I mean, it makes a great executive assistant, and I used to pay thousands of dollars a month for those. For one person, it now costs $9 a month to replace that. So there's some massive deflationary waves coming. They haven't hit all sectors and all industries yet. In fact, if you know anything about AI and are working for a company, you are well above the average and the norm. I'm sure many of these large institutions don't have a clue what's coming yet, which is always usually the case. But nonetheless, the reason I want to look at this in the stock market and the Buffett indicator isn't because I think he's right here, but because I think just in general things are overvalued. But that overvalue is coming from the inflation of the currency supply, so we have to keep a close eye on who's inflating which currencies. And one of the things we had looked at in the past was China had been massively increasing their M2 over the last few years as well. So it's important to remember that not all of the purchasing is going to come from the specifically from the M2 of the United States. All countries are printing. Almost all countries will inflate at some point or another. So it's which countries are going to inflate that will cause the general market to increase. And the last month alone, basically from January to February to March, the Chinese have increased their M2 by around 2.3 trillion won, which I believe is like 650 billion American dollars, which is not an insignificant amount. And in the start of this bull market, I said we're likely going to see a massive increase because of the Chinese M2. So far, that's ranged true. But back to some of our more regularly looked at charts here. I did want to take a look at gold. It's been really interesting. I thought if you were here earlier, I'd compared Bitcoin and gold because they both looked very similar in their chart patterns. And we were spot on about gold. Gold is still in its uptrend following its SOS and LPS phases. I don't think it's done, although it is getting close to cooling down. The stochastic RSI is pointing up for the last little bit here. So I think gold's going to run. But today also, it's important to note that the bond market has also spiked. At least the 10-year, the 5-year the 5-year jumped up around 0.25%, then also fell today. But the 10 and 30 year are also up around 0.25%. So these are usually signals that people are looking for somewhere safer. The fact that gold is higher and the US bonds are higher, people are looking for something safer, the likely more volatility to come in the rest of the markets. But that doesn't mean they can't and won't turn on the money printer at some point. And if you see that, if we see quantitative easing of any kind, oh my God, get rid of every single fucking dollar you have and buy all the assets that you possibly can. But until then, I'm going to stick by this thesis. I think that Bitcoin is going to come down. I was a little slow to the punch here, but I was busy living life, so can't spend all the time in the market. And in general, I still think that Bitcoin over the next 5 to 10 years is going to be the best performing asset. It's been the North Star and guiding light of the thesis for a long time. And we've been right about that. The governments have printed and all assets have gone up since I've started this channel. That's been consistent. There could be something catastrophic that changes that. I can still be wrong. It's not to say that I haven't been wrong in the past. I've clearly been wrong in the past. I was definitely wrong about my gaming thesis. So that cost me a fair amount of money. But nonetheless, we do get some things wrong. But here with Bitcoin, I've been pretty consistent. So I suspect that this is going to be the right next step. We don't enter a full-fledged bear market. We come into some type of reaccumulation after decline. We spend about another 200 to 300 days bouncing between the $70,000, $68,000 range to the $89,000, $90,000 range. And then we go up into the $150,000, maybe $250,000 mark before the market is totally cooked. We could see some fireworks here, again, if quantitative easing were to come back in. Anyways, we'll keep it short. Steel with the Arcane Bear. Thank you all for joining us on another TO Talks Tuesday. We'll see you again on Thursday. Every morning, evening, or afternoon on Tuesday and Thursday, you'll see a video from me. I've never been consistent. I've always just randomly made videos kind of whenever I felt it. So I'm going to try something different this time and be very consistent with the days that I make videos so you guys can rely on it and enjoy your cups of coffee as much as I know I like to. So we'll see you again on the next episode. This is Tio with the Arcane Bear. Thank you for joining us. Leave your thoughts, your comments, your questions. Am I high? Nope. But you might think I am.